So, everyone, today I will be talking about what happens when you are purchasing Spanish property and the U.S. tax considerations for Americans who are moving to Spain. So, a little bit about us as introduction. Uh, Slide, there we go. Um, so, again, thanks for being here. My name is Nicholas Castillo. Uh, I am a CPA. Where I was born, raised, did all my schooling, and my very early days of accounting, of international tax work. So I worked for one of the big firms in Miami for multinational corporations, um, tax compliance. Then I transitioned into working for Royal Caribbean. After 3 years, I was doing purely tax strategy for the company there. And a little after COVID, things got, cruise companies. Um, Started working for a smaller niche firm that on American abroad. That gave me and my wife the opportunity for living. Um, and we've living in Spain ever since. But you as a mix of my experiences in the past, we've found this company, Rook International CPAs and Advisors, to help bring international tax planning uh, tricks, tips, techniques to small business owners and individuals that are uh, moving to Spain, living in Spain, um, in all of Europe, all around the world, really, but we're focused on Spain, Italy, Portugal, and France. So it's great to be in the expat community like you, Tana, and thanks for having us again.
Yeah, great. Thanks so much. No, this is definitely an interesting topic. For anyone who doesn't already know me, I have a real estate consulting firm with my partner here. We're based on the Costa del Sol, but work all around Spain. And certainly when people are getting interested in real estate, thinking about buying a house or sometimes even renting, taxes is always this kind of big, scary black box, because a lot obviously changes when you move abroad, both from the US perspective and the Spanish perspective. So, one thing that you'll find is that it's really difficult to find people who have expertise on both sides. I would say both the US and the Spanish side. So it's great to work with Nick because, well, he's focused on kind of the US side. He does, he is based in Spain, has a lot of connections in Spain, and obviously can get you to the right person for any issue that you have.
Yeah,
And, kind of some basic education around the issues, on both sides, not just the US side. So, we always love being able to connect people with Nicholas and super happy to be able to offer this information today for anyone who's interested.
yeah. So in the effort of level setting, starting at a baseline, um, I'm going to talk about the very basics of filing a tax return as an expat, as a U.S. expat. If you've been living abroad for some time, you might know this already, so bear with us. But before we dive in, I think it's important for everyone to realize how it works. So, as an American living outside of the U.S., um, the important dates are here. So April 15 still is very important. That's the standard US tax deadline. And it is also the deadline to make the payment for your taxes. So if you are living abroad, um, you still have to consider making that payment in April. In April. Um, So if you are living outside of the US, you're considered an expat, then the IRS knows that it's going to take some time for you to gather your non-US documents. So they have implemented an automatic 2-month extension that takes us into June 15th. June 15 this year is a Sunday, so 2025 deadline is June 16th. And so, although you have until the 16th of June to file your return, if you do owe any tax, you should make the payment by April to avoid any penalties and interest on your payment. Then, in a similar way to when you're living in the US, you can request an extension. And this extension is 6 months from the April deadline, takes us to October 15. And this has to be requested. We have to file a document with the IRS, and usually it is approved. And so this gives us a little bit of extra time, especially since, in Spain, taxes are done sometime between May and June. So having that extra time is important. Then we could further extend the deadline another 2 months into December 15. And that one is really, I reserve it for emergency cases because a paper letter has to be mailed to the IRS and it must arrive there by December 15th. So if you are in Spain, if you're living abroad already, difficult logistically. Um, but the key takeaway here, always file on time, pay on time, remembering that paying is due April 15th if you don't have an estimate to make.
So, Nick, so the first extension to June is totally automatic. And then the second extension, is it important that that's requested before June 16th? Or like, how much time do you need in order to get that?
That's a really good question. It does have to be filed and accepted by the IRS on or before June 16th.
Okay, got it.
So if you press submit on June 17th, then it's going to be late and you'll be considered,
Mhm.
you'll likely be penalized.
But as long as that request gets in on time, it's pretty common for that to be approved.
Yeah, absolutely.
Okay, perfect. Thank you.
Absolutely. So now the question is who needs to file a US tax return? So when I talk about a US taxpayer, I'm going to be referring to a US connected person, which is a US citizen, a US green card holder, and sometimes for maybe a non-US citizen, non-green card holder, anyone who owns a business in the US. And so if you are married to a non-US person, so your spouse is foreign, and you earn at least $5, you have to file. That's a very low threshold. Um, if you're self-employed, so you have income from freelancing, Spain, that would be an autónomo. If your income is $400 or more, then you have to file a tax return in the US. If you have a child that is a US citizen and you want to request a refundable child tax credit, then you have to file a tax return. So if you're eligible for to receive that child tax credit and you don't file a tax return, you effectively forfeit your ability to claim it. And then for all other filers, um, if you earn more than $14,600 in 2024, then you have to file a tax return. And so, 14,600 is the standard deduction for a single filer or somebody that is married filing separately. If you are married filing jointly, so perhaps both spouses are citizens, then the limitation is twice that number. So when in doubt, consult with someone and see if you are truly under that limit. But as you can see, they're pretty low limit. Now, some additional items that we have to consider as expats, the FBAR, which stands for the Foreign Bank Account Report. That's an informational filing that all Americans who have bank accounts outside of the US are required to report as long as that account or non-US accounts have more than $10,000 at any time. Effectively, that form has to be filed by October 15th. That's, you know, on paper, the rule says that it's due April 15 with an automatic 6-month extension. So all the time without filing any paperwork to extend, you have until October 15th to submit. And it's slightly different than the tax return because it is filed with the Financial Crimes Enforcement Network, a department of the Treasury. It's not filed with the IRS.
Yeah, Nick,
Another,
I was going
yeah,
to ask you, like, if it's pretty straightforward because it is, yeah, I mean, it's a separate thing. No, like, if you're coming to Spain and you're planning to just live here forever, I mean, you're going to have to do your US taxes every year forever, basically, for most people, no? And you're also going to have to do the second filing forever, no? Like, for
yeah,
people.
yeah, pretty much. So there's people that they move to Spain, they buy a house, they're living, they're retired. They have to file a Spanish tax return, they have to file a US tax return, they have to file an F-bar most of the time,
Hmm.
and a lot of times even the Spanish equivalent of an F-bar.
Hmm. Yeah, so it does get pretty complicated, even if you're not really doing very much in Spain, you know?
Yeah,
Like we were
yeah,
talking about
exactly.
on the last slide. Yeah.
Yeah. So that FR is a really easy one to miss.
Mm.
Um, for some people who are, have probably more activity going on, maybe a business, maybe they have employment income, then quarterly payments can often be required. So, um, those are usually paid April, July, October, and January by the 15th. So, that's another date to look out for.
Okay, perfect. Just a quick comment because we continue to have people kind of trickle in, Nick, as you're talking. For anyone who didn't hear at the beginning of the webinar, everyone is muted, but if you have questions, feel free to drop them in the Q&A. That's one of the features at the bottom of your screen, should be on the Zoom webinar window here, and we'll be watching those questions and I'll try to like work them in throughout the conversation. Anything we don't get to, we'll hit at the end of the presentation.
Yeah,
Sorry, Nick, go ahead.
no problem. And so, as a US expat living in Spain, there are two provisions that help you to avoid getting taxed in the US. A lot of times, this helps us with the double taxation so that you're not paying taxes in both Spain and the US. The main one that's going to be useful most of the time in Spain is the foreign tax credit. This says that if you're earning income in Spain, such as employment or even rental income, and Spain is taxing it already, then if the US tax rate is lower, you don't have to pay tax again. So this is about any US on your return. Another typical provision that people who are earning income use, the foreign earned income exclusion. This lets you take up to $100 of your income and exclude it from your taxable income. So the idea is that if you're earning less than that threshold, you won't pay any income tax on that
Mm.
in the US. In Spain, most likely you will still pay tax. Um, in terms of the child tax credit, that is available for uh, most Americans with children, and you're eligible to get up to $2,000 of credit against taxes, or even a refund of $1,500 per child, um, which is pretty nice. And you have to be careful when filing because if we use a foreign earned income exclusion, then you're not allowed to take the child tax credit. So it's a really big deal if you have kids and you have earned income, what's the right way to file? That's another really good question. Um, Now we'll get more into the meat of this presentation, where talking about the different kinds of real estate owners in Spain that we're going to talk about here. So first is if you're going to buy a property and make it your principal residence. Um, so if you buy a property and you make it your house, you live there, then that becomes your principal residence, becomes your domicile. That's an important word for taxes in both countries. And it also becomes the center of your interest. That means that you will most likely be subject to Spanish taxes on your worldwide income. And because you're a US citizen, you also have to report and use all of the provisions we talked about previously in order to make sure you're not taxed twice. Now, the second type of owner that we're going to talk about is the investor or real estate developer who may not live in the property, but they are, purchasing a property in Spain and may decide to hold it for investment or resale, or they might hold it to rent as an income property. Um, there's a third kind of hybrid situation here where if you're buying a property as a secondary home, as a family vacation home, then uh, that is also something I'll mention as we go. Um, but in that case, you aren't making the vacation property your domicile. It won't be your center of interest. So you'll be treated a little differently than than the principal resident owner. Um, and so the main considerations for these types of owners will be uh, when you're buying a Spanish residence, what do we have to do? When you're renting or selling your US residence, which effectively think that you're making some money off of the property. And then number three is, what are your tax opportunities and the pitfalls or the risks that you might run. Um, so how does buying a Spanish property affect your US taxes? In short, it immediately it won't. It won't affect your US taxes because until you earn a dollar from that property, either through a rental or through a sale, then there is very little impact to your US taxes. However, that doesn't mean that you should do nothing. Um, we recommend that you keep really, really good records of your property price, any closing costs that you paid, uh, as time goes on, any repairs, any major remodeling that you do, because um, in the US, we have been spoiled where the IRS and the banks keep really good details according to US laws, but the Spanish regulations aren't going to keep records to benefit us in the US. So it's really important that you take care of that on your own and make sure that you have um, that information. So mortgage interest, very similarly to in the US based rules, mortgage interest on a Spanish property can be a deduction. So it is important to make sure that you collect this information from your bank or your mortgage broker. So we can include it on the return.
Nick, one quick question before you move forward from this page.
Yeah.
When you say like before or unless you earn income on the property that you purchased, it's not going to have
Mhm.
impact on your US taxes. Is that once you start earning any income on the property, is there some kind of a threshold at which it starts to matter? Like say you rent out the property for just a month, like it also has basically no impact. Or is it like as soon as you start generating any dollars, that's when you have to start thinking about it?
Yeah. As soon as it generates any dollar, any income, we have to start thinking about it as a rental,
Yeah. Okay. Thanks.
which is a good segue. Um, so property ownership in Spain and the tax filing requirements. Just in general, when you're living in Spain, if that's your domicile, you are going to be filing a tax return in Spain and then later one in the US. Typically, because your tax residence in Spain means they get to tax you first. We file the Spanish tax return first, then the US to make sure that we can use the tax credits on your US return. Um, and then, something to keep in mind is that when you are in Spain, you are filing a Spanish income tax return. You will also file a number of Spanish real estate tax returns as well, depending on if it was your main property, if it's a secondary home that you are renting versus not renting. So there's a lot to keep track there.
Nick, can you speak at all to just the kind of general timing around Spanish tax returns? I guess it's
Yeah,
the same as the US, no?
yeah, it's definitely not the same as the US. Um, Income tax filings are generally between April to June. The tax authorities determine what the exact date is, but that's more or less when you should be thinking about it. But even then, there are certain forms that are due at the end of March. There are some forms that are due at the end of May. The property tax and your financial, I think it's your financial interest report is due at the end of March. And so it's not a good idea to wait until May or June to start talking to your Spanish gestor or your tax preparer to get that taken care of.
Okay, so that should happen like January, February, no?
Yeah, definitely.
Okay, thank you.
Definitely. And so just a note on the Spanish Golden Visa. So I know that in the past, the Golden Visa has been a really great fast track option to get the foreign residency and citizenship in Spain. Um, but we are seeing that this is changing. Um, I know you could probably talk a little bit more about that. But the housing crisis is changing a lot of things in Spanish law. So, we saw that 100% tax on foreign property that's hit headlines recently.
Yeah. Yeah, no, I mean, that's basically it. I think, the 100% tax on foreign property purchases is mostly rhetoric, in our opinion, and most people's opinions, I think. Very unlikely to come to fruition. Very likely would be determined to be discriminatory in a number of ways, but it is kind of reflective of some of the general rhetoric that's out there right now, but not likely to have a big tax implication for you if you're thinking about purchasing property here as a foreigner.
Yeah, yeah. And anything about the golden visa, I mean, I'm pretty sure it does sunset April 25, right?
Yeah. April 3rd is officially the last day to apply for that. So if you're interested in that and you haven't started looking yet, it is almost certainly too tight to get it done. Not totally impossible. You could find a property in a week and make an offer and have it accepted, and in another week go to the notario and everything, but it would be extremely difficult. Um, and yeah, but if you're interested in theory and you wanted to move super quickly and you can, spend 500,000 or more in cash, um, it could, in theory, still be an option for you for the next 3 weeks or so.
Yeah. So big bold on the in theory.
Yeah, big bold on the in theory, yeah. Would be quite tight at this point. Yeah, and if you've already purchased a property here, congratulations on the golden visa. You managed to work it in before this one went away.
Yeah.
Yeah.
All right. Well, continuing on, let's say, you're ready to move, you've identified your property. Now you're asking the question, should I sell my house in the US before I move? So, um, it's a really good question and it depends on a lot of different things, right? So, Usually I start off with, do you intend to ever move back to the US, and are you going to go back to that house? Because real estate's going to be changing over the next few years, and you never know. Um, it also really matters which state the property is in, mainly because the the tax the tax changes, or you have to think differently whether you have federal taxes and state taxes. There's the really difficult states, the sticky tax states, like New York and Illinois, California, Virginia, where you still would probably have a state tax liability on your home sale. Uh, if you're maybe you don't sell the property in the U.S., but put it up for rent, get some income while you're out. Now, um, timing of a home sale is going to be really important because if you are a tax resident in Spain when you sell the property, you could pay Spanish tax on that property sale, which is really painful if you have, if you have the exceptions to or you don't pay tax in the U.S. So that's something. I think on the next slide. Um, yeah, here I'm going to jump into the two scenarios that I want everyone to think about if the answer to should I sell my home in the US is yes. Um, so when you have a property in the US that you sell, it's a US real estate asset. It's tied to the US. Um, by most rules, you pay the US tax, the US capital gains tax. And then um, if you're in Spain, you're a tax resident in Spain, then you might pay Spanish tax on that. And you have to use a foreign tax credit. That becomes a fun issue to see which country deserves the to collect the tax. Um, so let's run through the scenario. Scenario one is that you're selling your house in January and then you move to Spain. So you are a tax resident in the same year that you sell the property. So that means that the Spanish government will subject um, that capital gain to Spanish tax. Um, then, the capital gains that you pay in the U.S. on that sale can be used to offset Spanish tax liability, but there's a catch later. Now, let's say that you are going to sell your house in January, but you wait until July to make your move. By doing that, by delaying your move, you strategically delay your Spanish tax residency until the following year. You have to spend 6 months in Spain to be a resident. So, um, so in the scenario, we're saying you're moving to Spain in July 2025. You're selling the property January 2025. So you would not have to file a Spanish declaration to show that sale of the property. And so you won't have to worry about Spanish taxes. Now, the problem with scenario one is that if you've lived in your home for 2 years or more, the last 5 years, then you are exempt on up to 250 or $500,000. You're single or married. Um, you're allowed to exclude that amount from your capital gain on the property. So, sure, in scenario one, you are selling the house in the US. It's subject to US tax first, and then you get a credit against your Spanish income tax. If you're using this exclusion, which works great for people who aren't Spanish tax residents, you don't pay tax in the US, but you don't have a credit to use against the Spanish tax. And so you get stuck paying the Spanish tax anyway, which really hurtful, really painful to have to do if you weren't planning on that.
Mm. Yeah, Nick, I love these examples because this is a great illustration of like the 2 points that I always keep in mind with respect to because I don't know very much, no, with respect to taxes. But I know that with respect to capital gains and just being careful on the timing, those are the two like points that you have to understand that you have this deduction that helps you avoid paying capital gains in the US if you've been living in the property for 2 of the last 5 years and it was your primary residence.
Right.
You want to try to take that if you can. And that on the Spanish side, if you're a tax resident, which I think that you mentioned it, but just to clarify, 183 days or more of the year, right?
Correct.
If you're a Spanish tax resident in the same calendar year that you sell your property in the US, then that sale also is subject to capital gains taxes in Spain. But it's interesting this example in scenario one because I have, the double tax how did you refer to it? The exclusion where you don't pay taxes where you don't double pay your taxes. No?
The double tax provision.
The double tax provision could potentially kind of mess that up, no? That like just because you're able to take advantage of the deduction in the US doesn't mean that you avoided the Spanish capital gains tax, that you have to be careful of how they kind of play off each other.
Yes. Yeah, you really do have to be careful because you can do really well in one country and be free of the tax, but not do it right in the other one, and then be stuck paying the tax there too.
Right, right. Okay, perfect.
Um,
Good examples.
yeah, and um, yeah, we could spend half an hour on this slide alone, but
Yeah,
I
it
will.
is a little bit confusing if you haven't heard of those provisions before.
Yeah.
Um, but yeah, I mean, I think those are like the two or three things to keep in mind, no? Like the capital tax deduction to think about in the US, what it means to be a tax resident in Spain, and that if you're a tax resident in the same calendar year that you sell your property in the US, then it becomes subject to capital gains in Spain, and that in theory you
Hmm.
should be paying the same capital gains tax twice in both Spain and the US. But obviously, if you have a deduction on one side, then there's no like double tax to prevent. So then you do pay it on the other side.
Yeah, exactly. That's a really good way of putting it.
Okay,
Yeah.
cool. I got it.
Okay. So, a potential tax advantage that most people who aren't familiar with the tax code don't know too much about is the section 1031 called the like kind exchange. And so this basically says that if you sell a US property and you have gains that are, not exempt, right? So you're stuck with a capital gain of $200,000 and you go turn around and you buy another US property within 6 months, um, then you are able to defer the tax on that sale and roll it into the next property, then hold that property for however long, sell it again as capital gains, buy another property within 6 months, and you keep deferring that tax for as long as you can do this correctly. So it's pretty popular in the US with real estate investors. Um, and I believe it works in Spain as well. You just have to keep uh, you have to respect the US to US and non-US to non-US. So um, if you sell your house in Florida, you can't go and do a tax deferred purchase of a property in Spain because that's not US to US. Um, so if you bought a house in Spain and you want to upgrade to another house in Spain, you can do that. That would be a like kind exchange that does have great tax benefit.
Okay, got it.
All right. Next, another typical question that we get is, what if I just want to buy a vacation house in Spain? Um, and so if you're buying a second property, there's very little that gets reported or affecting your US tax. And mainly if it is a private residence that is not rented. So if there's no income being earned, you don't report the income, you don't report the expenses. You can't use mortgage interest because it's not your primary home. It just exists. It's non-reported on your U.S. return until perhaps you sell it.
Mm.
Um, I think it is really important in cases like this where you know you want to have a good Spanish realtor that kind of speaks English and Spanish for you because when we were renting we're looking for this place, we had a realtor that was speaking only Spanish, and I have a pretty decent Spanish, but it was pretty tough to handle the real estate Spanish. So just my little tip is if you're gonna be looking for property, a good bilingual realtor is a great idea.
Yeah, definitely, because little things can get lost in translation very easily, as many people on this call will already be aware. Um, and Google Translate, etc., can go a long way. But yeah, if you have somebody who speaks both languages, obviously better.
Yeah, yeah. People can only do so much.
I don't know that one.
Oh, it's pretty good. It's kind
Yeah,
of like Google Translate.
but
Um,
better. No, okay, Google Translate is not actually that good.
yeah, it's like good for ordering dinner.
Yeah, 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 yeah. Yeah, that's fair. Okay,
Um,
it's a little more professional.
Yeah. So I guess this slide is really important. It's something that most people, even with U.S. rentals, may not realize is that um, in the U.S., you get to when you rent a property. This is for investors and those who are renting property out. Um, you report your income, you report all your expenses, and then because you cannot really expense the purchase price of your property, because that would just be totally a mismatch of um, what you're bringing in cash and the cost of the property. Um, the concept of depreciation comes into play because you get to take a percentage of the property value as an expense. Uh, that's really nice, and that's one of the reasons why depreciate or rental properties are such a great tax tool in the U.S. Because they give you this tax benefit every year. Now, what most people fail to really explain is that when you sell that property that has been depreciated over, let's say, 10 years, this concept of depreciation recapture comes into play. And effectively, you take the tax benefit that you were able to take over the last 10 years and you have to pay it back now. Um, and so it's a potential surprise because you think, oh, I bought my property for 500,000. I'm selling it for 800. That's $300,000 gain. Great. Well, if over the life of your rental, you've depreciated it from 500 to 400, that $100,000 gets recaptured and is a taxable income in the U.S. Um, and
Interesting.
so if you have a U.S. property or you have a Spanish property, you're depreciating it for U.S. purposes. This applies. So buyer beware.
Is there any benefit to doing it one way versus the other? Like, is there ever a benefit to not deducting a percentage of the property value to reflect depreciation as a business expense so that you don't have to then like pay for that again on the capital gain side? Like, I'm not sure which tax would be more.
Yeah, I'm sure if you run a sophisticated financial analysis kind of thing, that it probably comes out to be the depreciation isn't that bad, the recapture isn't that bad, because saving money uh, throughout 10 years is better than
Also at
paying
the
a
time
little
value of
extra.
money. So I know it's not a simple question. There are a lot of factors coming into play.
Yeah. Um, but one of the funky things is that In Spain, you're not allowed to take depreciation. So that's not an expense against your income tax in Spain.
Hmm.
And so it creates a mismatch between your rental income as reported in Spain and the rental income reported in the US. And then you have to report, um, you have to recapture at the end. Um, so this is where foreign tax credits come into play, and it ends up being a wash, is the point I wanted to get to,
Okay.
um, for the most part. And it's just a usually a surprise to most people. So um, good to put it out
Okay. Yeah, good to know.
there. And then just to kind of wrap up, the key takeaways are going to be, if you're buying a property in Spain because you're planning to move, that's awesome. Uh, make sure you familiarize yourself with the new tax filing and payment calendar that you have to live up to now, um, in the US as well as in Spain. If you're living in the US still, you're just investing in Spanish property or it's a vacation home, then still makes sense to be prepared for the Spanish tax filing requirements that you're still going to run into. Um, Number two, I think really big is that section about, when you sell your property and when you become a Spanish tax resident can have huge implications on your overall tax. So really important to think about that and do it deliberately. And then number three is just in general, becoming a Spanish tax resident while being a US taxpayer has lots of implications. So it's important to plan and working with a specialized CPA like us can help you save a lot of money in the long run. And also starting your research as soon as possible so that you are, educated and you aren't surprised and you know the right questions to ask. Um, that's my biggest piece of advice to everyone that's thinking about this.
Okay, that's great. Yeah, I mean, this is a great, I think, starting point for anybody who is new to all of this and wants to just kind of have a handle on the basics and know, be empowered to start asking the right questions and get connected to the right professionals. So, Nicholas, thank you so much for joining us for this. I was taking notes of a few direct questions that came in to me throughout. Um, One super easy one to start is whether your tax residency in Spain can change from year to year. I
So
think
it was there another part
I
of the
think
question?
super easy. I qualified it as super easy, and maybe it's not.
Yeah, it's pretty straightforward because it's not as a fun answer. Is that usually you spend 183 days in Spain. That first year, you're a tax resident, and you have to really separate yourself from Spain to not be considered a tax resident. And one major thing that they look at a lot is if your kids are in school in Spain, you're a tax resident. Doesn't matter how many days you truly spent there. Um, that's going to be a big factor.
If your kids are in school for any period of time.
If they're in school for the full year, but you're trying to do, you're leaving for the weekend, you're leaving for a month,
Yeah,
or
yeah,
you're
yeah.
leaving your kids in school, you're a tax resident.
Okay. Yeah, I was thinking about a scenario where somebody, say, moves at the end of July, right around the time when their kids are starting the new school year. No, like by the 180
Yeah,
day rule, they wouldn't be considered to be a tax resident, but would their kids being enrolled full time in school, like starting in the fall, make them a tax resident?
that wouldn't make them a tax resident because the whole family moved in July and, they're all under 183 days.
Okay. But if you're in a situation where like you're kind of based in Spain throughout the year periodically, and like maybe when you add up all your days in Spain, it's only 160 days or whatever, 182 days, but your kids have been enrolled in school throughout the calendar year, then they're going to say, yeah, you're a tax resident. Is
Yeah,
okay. Okay, good.
yeah, that's correct.
Okay. Another one that came up was about the wealth tax, which is true that I guess we didn't really talk about because that is more on the Spanish side. Um,
Right.
but it's true that I was also thinking about it on the slide where we were talking about, whether like buying a second home in Spain like would have implications for your taxes in the US. And we were saying like, you know, for the most part, no. It's true that there exists, a wealth tax around Spain that I don't know
Yep.
a lot about. I don't know how much you know about it, but I know there's kind of like a basic threshold, which I think is like your worldwide assets over I think 700,000 euros are taxed,
Hmm.
and then there's also a deduction for your primary residence I think, but not a secondary residence.
Right. Right. So the wealth tax applies for most of the regions of Spain. You get an exception in Madrid and Andalusia.
Mhm.
But then they have the solidarity tax, which kind of captures it and puts you back into that. But the idea is that with the wealth tax, your global net assets are potentially subject to uh, tax between like 0.2% and 3.5%.
Mhm.
Um, and then you do get an allowance for $500,000 automatically, and I think it's 300,000 for your primary residence. So that's 800.
Mhm.
And then above that, that you have $1 million, it would be your $200,000 or euros, sorry, that's subject to the wealth tax according to the brackets. So maybe it's 0.5% on 200,000 is your wealth tax. Um, and it's a funky calculation, but it's real, and most people should worry about it or consider um, planning for it if their global assets are around 800,000, $1 million.
Mhm.
That's the right time.
Yeah. Okay. And that goes like by individual, no, not by family.
Correct. So it would be husband and wife. The each are evaluated separately.
Okay, got it. Okay. Could you talk a little bit, Nick, because this was like all great general information, but maybe just a couple of minutes quickly before we close on like the specific services that you provide. Obviously you can do, I think, like basically any kind of a like tax return on the US side,
Hmm.
for expats who are living in Europe. I know that you also do like some tax consulting, like around like US based businesses for people who are living out of Spain. Like, is there anything else that people should be thinking about that might be interesting to talk to you or somebody about if they're kind of starting to evaluate their taxes?
Yeah, so we are a full service US tax firm. So we can do the 1040, um, and your individual situation um, on the US side, we could do the business side on the US. So you have an S corporation, you have C corporation, um, then of course FBAR, those kind of filings that are very important to do. Um, we do those as well. Then when it comes to advisory and planning, comes really in handy when you're planning to move and you don't know how your income is going to be taxed. And maybe we have options to set you up in a situation, in a structure where you pay less taxes in the US. How do we plan for the wealth tax? How do we plan for, you're running a business and, you know, what is deductible in Spain and what do I report in Spain? And so we can do um, the advisory and the planning and the compliance for all of that.
Mhm. Okay, and everything on the US side, no?
Right. On the US side, we work really closely with a number of Spanish gestores and preparers, so we're at least aligned, and we make it a little bit of an easier process than going it on your own. But yeah, we are U.S. based.
Okay. Yeah, that was just the final point I was going to make again, because I know we touched on it a little bit at the beginning of this call, but that is one thing to be thinking about as an expat doing your taxes, is that both sides are important. So if you can work with somebody, uh, first of all, on the US side, like Nick, who has some kind of understanding of the Spanish tax framework, so that he can help you strategize on your US taxes, kind of thinking about what the implications are going to be on the Spanish side, that's great. And you probably also will want to work with somebody on the Spanish side who is basically his equivalent, who understands, who is kind of an expert on the Spanish tax side, but also works with a lot of Americans, understands kind of the basics of what's happening on the US side, or to people who are already connected and work very well together. Um, and we can also recommend people for that.
Yeah.
Who's interested, but great. Okay, excellent. Well, I don't think we have anything else for the moment, but yeah, I think this was a great kind of primer on the tax world for expats, American expats in Spain. Thank you so much to everyone who joined. We will send out the recording to everyone who joined and everyone who registered. And what is the best way to get in touch with you, Nicholas, for people who have questions, or if somebody is interested in working with you, how do they get started?
Yeah, so I'm very active on LinkedIn. It's a great place to find me and chat a little bit. You also can send me an email, and we can set up a free consultation just to talk about your situation, and see how we can help you and work together going forward. So um, yeah,
Yeah, he is very active on LinkedIn. I have to say, I really enjoy your LinkedIn posts a lot. Always like they're a little bit
yeah,
envy inducing, because it's a lot of like beautiful photos of like, here's where I am in Europe today, like networking with, Americans here, or like other tax professionals here. A lot of like shots of like Nicholas eating like delicious food somewhere.
yeah, yeah. It's
Like
fun.
good like stories also. It's like a good blend of kind of stories and useful information. I enjoy them a lot. But yeah, you have his email here on the slide as well for anyone who wants to reach out.
Yeah. Thanks
Cool.
for the piropo.
For sure. All right. Okay, Nicholas, thanks so much. Thanks again, everyone. We're gonna cut it and we'll be reaching out with the recording to follow up.
All right, thanks again to you and for everyone for hanging on and listening to all that.
Great. All right. Take care, everyone. Bye.
Bye.